We start today's market talk. In many ways, the stock market is like the weather. In that, if you do not like the current conditions, all you have to do is wait. So, if you have seen, fear, greed, herd instincts are the common emotions that play a big part in price action observed in the markets. Warren Buffett said that he is always looking for undervalued stocks. So if there is a stock at good price, at a good price, and it's worth buying, then go for it. Even if it decreases in short term, trust the research you have done to produce long term gains, but consistently keep check of your investment thesis to make sure that it is valid. And in case there is a dip in the stock, it is not for something a reason for which you are not thinking about. Okay. The setup, as I see it, global equity allocation is at 2-year high as investors discard recession fears. They did a survey in US. Two-thirds of the fund managers say that US economy will have a soft landing. They expect US economy to soar despite monetary tightening. So the euphoria is very high, and the stock markets are at all-time high. I believe that the next government will have a strong focus on manufacturing, digitalization, defense indigenization, and infrastructure. So these are the sectors to be focused on, while premiumization in consumption, capex upcycle, and green technology are the trends which are already running, and it will get stronger. So select stocks which are building the future and have the best prospects of benefiting from governments pushing the pedal on reforms should be looked at for longer durations and not only for trading and all that. Now, a few stocks which were relevant in this week. First was Hindalco. It corrected more than 10% on 13th Feb on the back of delay in completion of large capex at Novelis, along with 65% increase in project cost. Results were in line with expectations. Margin expanded at aluminum upstream as coal and coke prices were lower. Basically, the input costs reduced. Novalis has increased the project cost to around 4.1 billion, almost 65% higher than what they had guided earlier, and they expect to commission it by end current calendar year 26. That is a delay of 1 year, and they are saying that it will not generate any free cash flow over FY 24-28 due to revised capex estimates, and due to that the stock has corrected and has come down to around 500 level. And after this current bit of consolidation, it may see little bit more correction. IRCON, robust rail and highway capex will boost the order book. However, competitive intensity and delay in execution will have to be watched. Now, IRCON is likely to surpass the revenue guidance of 15% for FY24, that is the current year. Healthy order book of They have an order book of rupees 29,436, that is roughly 29,500 crore. 54% of the order backlog has been won through bidding route. That means they are competitive. EBITDA margins improved due to increase in execution of international orders. They are focusing on highway segments now, resulting in decline in railways share in their order book from 76% to 72% year on year. So that is good. They are diversifying. FY25 EPS is expected to be rupees 11. So if you give it a reasonable PE of around 20-21 times, in my view, it is fully priced. Mahindra and Mahindra posted strong financial results in Q3 FY24, driven largely by contributions from automotive sector and a reduction in raw material costs, which resulted in expanded operating margins for automotive segment. However, the agricultural segment continued to face challenges. Demand momentum is strong for Mahindra and Mahindra in SUV segment, while commodity cost pressures are easing, as we are seeing in all cases now, which is leading to better margins. Tractor segments is was seeing a slow single-digit growth in FY24. Capacity expansion they are doing in a big way for SUVs so as to reduce the order book time frame. Farm equipment sector had minus 4.5% volume year-on-year growth, while automotive sector had 19.8% volume growth year-on-year. SOTP valuations for FY25 comes to around 1750. So I think here also it is fully priced. IRCTC with limited growth opportunity in high margin ticketing, internet ticketing segment. Again, we can expect now modest returns ahead. Uh, Upside will come if there is a capacity addition in passenger train, because we must understand the internet ticketing has a margin of roughly 80% plus, while catering and water and all are in low double digit or 15 odd percent margin businesses. So the growth will come if the internet ticketing increases. Now what is happening is that the number of passengers are reducing while the quality of trains are going up. So you have to have more trains so that they can get more revenue in terms of ticketing, number of tickets being generated. So next set of growth would be modest. Profit. The other issue is there is a problem of profit sharing with railways in its monopoly businesses, which remains a overhang. They did a provision of 14.5 crore, which was small for rail neer business because of additional profit sharing with Indian Railways. So that is again a overhang. Now FY25 EPS is expected to be 17 rupees. Hence, it is already at 55p at its current price, while it is showing a growth of around 18 to 19% year on year, or that is a CAGR growth. So that means the PG profit P to growth is around 3x now, which is pretty expensive. Hence, the upside is limited. Senco Gold is among few listed jewelry stocks that have experienced and reputed management, strong growth track record, and good governance practices. For jewelry stock, this is very important because there are a lot of uh, poor corporate governance companies also. So the market shift towards organized players, a launch of lab-grown diamonds and handbags has been very favorable for them. Their revenues grew 23% year on year. Same store sales growth was strong at 17% year on year. Gold jewelry volume grew 9% year on year. Diamond jewelry volume grew 27% year on year. Gross margins though declined as they enhanced discounts and offers to acquire customers. So that is a concern. They are basically Calcutta and East based. So now they are focusing towards North over the next few years. Lab grown diamonds, as some of you would be aware, are at one fourth the price of natural diamonds and has lot of growth potential because it looks the same. FY25 EPS of 29 times, the present P is around 25, 26. So there is some potential ahead in case they come up with decent results. So this is Hindalco. If you see here, as we discussed, Hindalco corrected and then has come to its 200 EMA and has is taking support there. So let's see if this holds. And it has come down or sold off with high volumes. The RSI is also at somewhere close to oversold level. So keep a track, but it is not going up also too soon right now. So it may just have a time correction now at these levels. This is Mahindra and Mahindra. So if you see, Mahindra and Mahindra had a near breakout and is now reached that 1835 odd levels. It went to around 1850 again with large volumes. RSI is reaching the overbought levels. I think it is fully priced now, so no point chasing it now. Let it correct, come to somewhere closer to the moving averages, and then again get into this. But if you are holding it, keep holding it. Okay, coming to certain technical issues. US 10-year yield, this is a weekly chart. As the US PPI and the other economic data is strong, the yields are now inching up and has crossed the 20 EMA. So it has reached to around 4.28. The last PPI was also very strong. Producers price index data from the US was strong. So it is trending upwards. Hence, so this has to be kept in observation. Brent crude again last week was at the similar levels. It is not moving up, not moving down, suddenly stuck at that 80, 81 levels, and it has been in the same range, and it is declining though. The trend line is declining. So there's not much of hope from here. In India, all those oil producers had a problem because the government increased the windfall tax against taxes. So that was a concern. Dollar index, now if you see there's a declining trend line, it is rising up. It tested that and corrected during this week. So this has to be watched. Right now it is above the all 20 and 50 moving averages. So it's in an uptrend. Now this is negative for commodities. So this has to be watched, and this is related to the US crude 10-year yield and dollar index are totally related to the US rate cuts. Now, gold, as the dollar strengthened, gold corrected and has now taken support at 20 EMA. So it is roughly at that 2000 level. It is not moving up, not moving down. So that's what I was telling, that this 2070 remains a kind of a resistance. And let's see at what level it goes. If the dollar strengthens, then the gold will correct from here. Right now, they are just waiting and watching. Nasdaq continues to go up. It went up. It corrected because after the consumer inflation and the producers' price inflation data came, and then the thing was evident that the number of rate cuts this year would be not that much as the market was expecting. But if you see, it has made a kind of a cup and handle, and it was moving up. It's at all-time high, and that is basically because of those seven top stocks, those magnificent seven things. India's 10-year yield, it went up, then it corrected. So it is at roughly at that, again, that 7% level, and wait and watch more. And it can go direct on any direction depending on what is the commentary from RBI and other places. India VIX, it went up, but it came down. It went up to 60 knot, I think, on Monday, and then it corrected. This is a weekly chart after the markets moved up. So again, but it is showing a uptrend. Now, if you see, it is showing an uptrend, and the 20 EMA is crossing the 50 EMA. So it is expected to keep the markets volatile now. So hence the trading will become more difficult, or one way to say is it will become better. Nifty 50, this is a weekly chart. Now we had a positive week, and if you see, it is making consistently higher highs and higher lows. So for the next leg of rally for the Nifty, it has to cross this last high of 22,126 it had made. And if you see the next one, if you see the trading pattern of the last week, it revealed a strong unwillingness to go lower. So on Monday there was a price correction, while the next three sessions were positive, and then we saw a recovery. While Friday was a quiet day, so it was kind of a neutral day after that, and market was kind of consolidating. So the Nifty needs to go above the last all-time high of 22,126 and then move upwards. It can easily go to 22,200, 22,500 levels in a very short time frame. Uh, Last two swing lows should of here, that is 21,600 and 21,200 here, should be now the stop losses. This is in short term, but this is over a slightly longer duration. This should provide a decent stop loss, and this is corresponding to the 50-day moving averages on the daily charts. So this should provide stop loss. Now, if you see the hourly chart, there was a declining trend line over the last 2 weeks, and then over this trend line only it took support and then has broken through the trend line. So now the trend has changed. After Thursday, Friday, it has broken above that. So now we'll have to see what happens in the next week and how the index behaves. But it can go either direction. It can go down and then go up, or keep going up. So nobody is sure. Reliance, if you see here, this was one of the reasons for index to go up now. Again, it made a kind of a doji only here, so undecided. But till the time it is above this 2850 levels, it will remain positive, and market will also remain positive. And if you see here, the RSI, it is still 876, so it is in momentum but slightly overbought. So just be careful with this. The stock which was in momentum was Adani Ports. It has made a new all-time high of around 1300 plus, and RSI is also high, and it continues to outperform. Uh, Nifty Bank, it showed some strength. This is a weekly chart, so it had a green candle, took support at its 50 EMA of around 44,300, and then bounced above the 20 EMA. Hence, it seems to be positive, but only problem is that it is now making lower highs and lower lows. So this trend has to be broken for it to show some substantial movement upwards. And if you see on daily chart, it has taken support at 200 EMA on the daily charts number of times, and then has moved up. So with this has to be watched. Now it is above the 50 EMA, so it looks positive and can head to that 48,500 levels if the momentum persists. Uh, the weak point remains the private banks, which on the weekly chart has taken support at 50 EMA. Because I think ICICI Bank and Kotak and HDFC Bank were slightly positive on Friday. But this is the weak part of the market. HDFC Bank, it has to cross this 1440 level to show some strength. Otherwise, it remains weak. And subsequently, we'll see. Right now, it is holding that 1400 level, but it can turn any side. The RSI is simply slightly now better than what it was earlier, which was oversold, but it has to be seen. ICICI Bank, again stuck in a range, took support at 20 EMA, but one can't be sure about this because it has continuously turned away from this rising trend line. It is not able to break out above that. So there is no momentum in this, which is visible in the charts. It keeps turning back from the 70 odd levels on RSI. PSU Bank's index continues to be strong and continues to show the good run. It has broken out above the rising trend line, and this is the strongest sector right now in the market. And this is basically due to the strength in SBI, which has the largest weightage in the PSU Bank index. SBI has clearly broken out and is now heading to 800 plus level, which I was telling 1 or 2 weeks back only. And though it is slightly overbought, but uh, with higher volume, price and volume action is positive. Hence, it should continue to do well. The other one stock which is doing well is PNB. It is at reached that 80 odd level of RSI, but it is showing strength. So the price action is good. It's reached around 130 odd after it came out of the FNO ban. So it continues to show positive uptrend. The PSE index again continues to be strong. It had a small amount of hiccup, but now it is showing strength. It made a fresh high in this week. So remain invested. Now, what is moving here? BHEL, no, it had those weak results, tested the 50 EMA of around 200 odd, and then bounced right back, and now it is again looking to head up based on order book and future potential and all that. So these are the sectors which are in momentum and one must remain invested. Now REC is interesting. I think it has run up a lot. Now if you see here in the last week, it has made a lower low and a lower low and a lower high. Hence, the trend is seeming to be now heading downwards. So one has to be careful with this. And I think it should test that 20 EMA on weekly charts, and then performance should again restart because it has run up too fast and the results are not that encouraging. It's a normal market performer and now it's generally around at 2 times price to book. Now the I've been telling about this IT sector. Moment it had crossed that 61.8% retracement, I was saying that please be long on this, and it has proved that. And now it is likely to make a fresh all-time high, and this is basically replicating the performance of Nasdaq. So all the key stocks, TCS, Persistent, Coforge, HCL Tech, are at all-time high. So IT is the place because the expectations were very low. So it has surprised people. Till I think the next quarter results are there, this will continue to perform. Now, Infosys, if you see here, uh, it has retraced 61.8% retracement of its fall from that high of 1952 to the low of below 1200 it had made. So once this golden retracement is crossed, now I think it should also head to its uh, previous highs over a period of time now. So RSI is also showing momentum now. So it's good. The stock which is showing momentum was TCS. It, if you see here, it bounced back from that support it had, and then went up. So it had a kind of again a doji here. But next week's price action will determine its future course. Right now, it is in momentum, and RSI is also showing momentum at around 71. The sector which is in real strong is the pharma sector. It's a leading sector. It's made an all-time high. It has taken support and then has moved up in October onwards, and results have been very good for this sector for among all its major constituents. The mid-cap index, if you see, it has made a hammer here. So one has to be careful with these mid-cap stocks. This is a daily chart. No, sorry, this is a weekly chart. This heading is a mistake. The weekly chart. So it has made a hammer here. So be careful because this kind of a hammer indicates a trend change. I think it should, in case it trend changes, it should test the 20 EMA, then go up. And some of these mid cap stocks have run up a lot. Same action is in small cap index also. Again, if you see here, lower highs and lower lows. So it is showing some weakness, though it bounced back during the week. So if it was showing and if it's a hammer has been made, so this may also restart its rally upwards also. So one has to be slightly careful with these stocks. Now, few stocks which are in real uptrend. One is TVS Motors. It has broken out from its declining trend line, and it's heading onwards, upwards now. So one is this, and RSI is also showing momentum. Volumes were very high on Friday, so it had a breakout with large volumes. The other stock which is looking good is Kalyan Jewelers. Again, the same setup, declining trend line. It has broken out with good volumes, and it is showing a strong uptrend once it has crossed the 20 and 50 EMA. So keep a watch on these stocks. So basically, if you see, all these gold dwellers are doing well. Now, the few stocks I'll discuss today in terms of fundamental analysis. So the first is NMDC. Uh, NMDC reported third quarter FY24 EBITDA at rupees 2000 crore plus 62%, plus 69% year on year and quarter on quarter. Uh, 15% above estimates due to lower than expected cost and improved operating leverage at higher volumes. Iron ore sales volumes came in at 11.4 million tons, plus 18.9% year on year and plus 19.1% Q on Q. EBITDA margins for the quarter expanded to 37.1%, an increase of 375 basis points and 745 basis point year on year and Q on Q. International iron ore prices have stabilized around the USD 130 per ton level over the last few quarters after touching their 52-week low of USD 103.5 ton in May 23. CapEx for FY24 is estimated at rupees 1800 crore, with over 1500 crore already spent in 3 months of FY24. The CapEx number is likely to remain flat in FY25 and would increase to rupees 25,000 2,500 to 3,000 crore FY26 onwards. Company is evaluating redesigning the Nagarnar pellet plant to increase its capacity from 2 million tons to 6 million tons. Now it's a very interesting stock. So if you see here, this is the third quarter FY24 results, and they showed 45% year on year increase. This is in billions, so that means this is 5,400 crores. And Q on Q also, they were up 35%. Expenditures have decreased, and EBITDA has improved. EBITDA has improved to around 2,000 crore. So year on year change around 62%, and quarter on quarter change is 69%. Margins have improved. They have come to their highs of 37 odd percent. PAT is at 1,700 crore. Year on year is 72%, and Q on Q change is 68%. So if you see there, one of the estimates which somebody has made on their valuation basis, so the target price has been given at triple two, so which is generally the present price also. So it's, I think, fully priced right now. Uh, they had highest ever third quarter production, and they were helped because earlier the international iron ore prices were remaining subdued for much of the year till September 23, but the iron ore prices have recovered due to better demand outlook in China after the central banks announced a 50 basis point cut in CRR. But how much is the demand going to increase has to be seen. So the iron ore imports into China will improve, and NMDC gets a lot of revenue from them. The interesting part is that the domestic iron ore prices are generally at 60% discount to international prices. So it doesn't make any, not much of a difference. So the key issue is how much of iron ore they are able to sell outside the country. uh, they had their best performance from since inception. Present production is around 47 to 49 million ton, and target is to double it, that is 100 million tons by 2030 2031. So we'll have to keep this in watch. Now, if you see here, this is their projected targets. They're expected to improve their sales and improve their EBITDA also, and EBIT also, and profit also is expected to go up. EPS is expected to reach around 23 24 in next year or so, FY26. So generally, these people have, because of their difference in their performance. Like if you see here, because of the cyclicality. Now, FY22 it had net sales of 260 billion, that is 26,000 crores, and it came down drastically in FY23. Then it started recovering. So there is a lot of cyclicality in the performance. Hence, they are given a low P. Uh, so giving it roughly a PE of around 9, 10, I think this is fully priced at around 220 to 240. So if you see here, year on year growth in revenue is again cyclical, right? Minus 32% in FY23, then it went up, and now it is at, then it was single digit. It is expected to be single digit next year and onwards. Margins are were up nearly 49%, has come down to around 34%. Similarly with PAT margins. So there is a cyclicality which you can see, net debt to equity and all that. So actually these are the stocks to be purchased when the P is at the highest, not when the P is at the lowest, because that is where all the negativities, and the EPS is at the lowest and the cycle is at the lowest, and then the price action starts. Uh, uh, so all these parameters are there. So one has to weigh these things. Now, if you see here, again, EBITDA per ton, it dipped in FY 21 22. then it went up, so the price action was good, then it again dipped, and now it is again showing an uptrend. So this is what is cyclicality in performance. uh, and the cost of production also, because of the volumes, goes up once the and then the stock prices starts correcting and EBITDA per ton starts correcting, and now again it is inching downward. So let's see. These are China's iron ore imports versus price. So if you see here, the iron ore imports from China now are again on an up path. So this should be positive for NMDC. These are the change in quarterly EBITDA per ton. So if you see percentage wise, you can see how the EBITDA per ton keeps changing. So the point here is, if you're investing, you these are the times to get this stock, to get it at the bottom of the cycle, and then ride the cycle and then sell it at top of the cycle, not other way around. This is the year on year change in cost of production. The same thing happens. The cost of production again goes up, so, and then the cost of production goes down. So these are the times to get into this stock. EBITDA trend, if you see again, cyclicality and profit after tax also, right? So it goes up, goes down. Now the price action, if you see it after the results, it has moved up and now it's at around 244, and the RSI is at around 85. In my view, it is kind of overbought. So pretty risky now. I think the stock should correct to the 20 EMA, and then we'll see from there. The next stock is Bosch. This is an auto ancillary. It remains committed to localization and it would yield results in medium term in the form of margin improvement. EBITDA margins will recover to over 14.3%. Right now they are around 11-12%. In autos, powertrain segment solutions grew 20% year on year. The segment outperformed the broader industry driven by increased content per vehicle, mainly of exhaust gas treatment components, higher preference for utility vehicles and medium and heavy commercial vehicles. Two-wheeler business grew 7% Q on Q versus industry decline of 1%. So they performed better than the industry. Automotive aftermarket grew 8.6% year on year due to higher sales of spark plugs, filters, and other BS6 requirements and higher lubricant sales. Non-auto segment grew 32.5% year on year, led by 30% year on year growth in consumer products and building technologies growth of 18% year on year. Growth was driven by increased market demand for Blue Tools. Blue Tools is a kind of brand for tools and accessories and execution of higher number of orders for installation of security systems. Electrification, it is already supplying hub motors to OEMs and has been localizing production lines of motors for OEMs so that customers receive PLI benefits. So that they are making things locally to get PLI benefits. It has qualified for PLI scheme with Bosch Automotive Motive Electronics, a contract manufacturer for Bosch. So it is also likely to participate in the PLI scheme. Now, if you see here, uh, this is a third quarter result. The revenues were flat or as per the estimate. This is the estimate, but the EBITDA was much higher. It is because the raw material cost decreased. Percentage raw material cost as percent of sales was only 62%, vis-a-vis what was expected was 66%. So this led to improvement in margins. Margins from around 10-11% improved to suddenly 13.8% because of lower input costs and other expenses, and that helped the EBITDA, and also that helped the PAT. The profit after tax was up 48%, and that has led to the recent rally in the stock. This is the future projection. So if this is in millions, so this is roughly around 17,000 crore they are expected to do in this financial year, and around 18,800 crores in revenues in FY25, and around 20,657 or 658 crores in FY26. Now, if you see here, the improvement in PAT is expected to be in double digit for FY24 and FY25 around 20% plus, and margins are also improving now. So they are expected to improve to around 14% plus. This is basically because of better localization, what they are doing, and producing things locally instead of importing it. Hence, they're expected to improve. This is the ratios. So if you see EPS in FY25 is expected to reach around 740 to and FY26 around 824. So keeping an EPS of around 740 to 820, giving it a P of around 30 times. So anything between 23,000 to 25,000 is a decent valuation with 20% growth as I showed you in profits. So maximum at around 25,000 it gets fully priced. All other parameters are decent. So if you see the all the ROE, ROIC, ROCE are expected to remain stable or improve, and valuations are becoming less expensive now. After the results, if you see here, the stock has run up now and has reached the 28,000 levels, and it is overbought now. 86 is the RSI, and if you see, the reason is last 4 days they went up with high volumes, basically because the results were better than expectations. But I think it is now fully priced. It had an up move in anticipation of good results in January onwards from 23,000 levels now. It has reached 28,000 levels. So we'll have to again wait for a dip to get into this stock. The last stock I'm going to discuss today is Nalco. Uh, Now, Nalco is a maker of alumina and aluminium. China holding its melting capacity cap, fewer restarts, and new projects, along with possibility of China's stimulus, would support the aluminum prices. Alumina prices have recently surged to $360 per ton, led by China refinery curtailment. The global alumina market is expected to be in a slight deficit, which could support prices. Now, you must understand there is a difference between aluminium and alumina. Alumina is synthetically produced aluminum oxide Al2O3 that is used as a starting material for smelting of aluminum metal. And aluminium is one which is a white kind of a metal which is used for various production, and it is made from bauxite. It is constantly operating at its peak refining and smelting capacity, and the recent softness in thermal coal prices have led to lower power costs. So again, input prices have reduced. Revenue grew 2% and 10% year on year, Q on and quarter on quarter, 3% beat versus estimates. EBITDA improved 7 to 773 crore, up 68% and 95% year on year and Q on Q, up 39% and 59% beat against consensus, led by lower raw material, which was down, power and fuel again, which was down, and employee expenses again, which was down. So the margins improved. Now, Nalco was in the news because they did a joint venture, Khanij Videsh India Limited, Kabul, and with Argentina's Cayman SC, they signed an agreement for exploration and mining of five lithium brine blocks in Argentina at an initial cost of 200 crore. That led to the re-rating of this stock. It is in the process of setting up a fifth stream of its existing alumina refinery, which will add 1 million tons to its existing installed capacity of 2.1 million ton. The projected capex for expansion has been revised to 6435 crore in FY23 from the earlier estimate of 5,540 crore in FY2020, which is again negative. The project cost is likely to be further revised upward, so watch out for this. As per the company's annual report 2023, the target for commissioning of the project is also pushed forward to FY25 from December 24. This was their results. So if you see here, the revenue was up 2% in this quarter, year on year. Nothing much, but the expenditure declined 9%, and which led to an EBITDA margin growth of 68%. And now the stock is gone up, and profit after tax improved around 84%, and EPS improved 83%. So that is one, because the input costs for power, fuel, raw material have come down for everything. So in all cases, you would have seen there is a common theme, which is input prices have come down. If you see the expected financial, this is in crores. So for the it is expected to perform consistently over the next few years. EBITDA, EBIT, etc. is going to go up, uh, and EPS is also expected to reach around 12 odd rupees in FY25, FY26, and they pay dividends, so they're expected to give around 4 rupees dividend. So they are giving around 30% dividend to the people from the profits there which are accruing to them. Now at 12 rupees earnings, you give it at around 10, 11 P multiple. I think this is now again slightly expensive only at the present levels. This is the analysis. So you see, sales growth is improving. EBITDA growth is better efficiency, profit growth again, better net profit growth of FY25 expected to be good. EBITDA margins is expected to be 25%. Net profit margins are 16% plus. Uh, Efficiency is better. Valuations have come down 11 12 times, which is at its long term average. Return ratios have improved. Now they are in high double digits, which is decent. Now the Nalco stock, it went up with that Argentina mining news from that 90 100 odd levels, and now has reached that 162 level. The I think the results gave that flip to the stock, and it is in momentum now, and it went up with decent volumes after a correction. So watch out for this stock. Right now, the momentum is good, and for next 1 year, I think this should perform well. But it is expensive right now. So this is what it is. Now there were two stocks which somebody wanted to be discussed. First is Canara Bank. So if you see Canara Bank, it has gone up with higher volumes, and RSI is around 76, so it is slightly overbought, and it has run up a lot from this 450, 455 levels. When the results came, results were slightly muted, but then the re-rating of the stock is taking place because moment they announced that stock split and all those other issues plus the PSU rally, so it has reached that 585 odd levels. So right now it is looking kind of a overbought. The other point which I highlighted was to look at the option chain. Now, if you see here, this is the option chain for Canara Bank. This is the put side, this is the call side. Now, if you see, the maximum call writing is at 600 levels and 590 levels. So these two levels should provide resistance. The interesting thing is that some of the people have written calls in the money also, which indicates that people are not expecting it to go up too much. And so this levels 590 and 600 should provide resistance in the near term. Now the supports, if you see here, as there has been unwinding here on this side and on this side also. The highest open interest is at around 570 and 550. So the support should come, decent support should be 550 now. And if you see here, this 550 corresponds to the generally the level of 20 EMA. So this should be the decent support to get into this stock. And that is where the highest OI is also there at 550, where the risk reward becomes favorable. So this is the uh, level to go long, and these are the clear indicators, the option chain, as to what are the resistances and supports. Now the other stock is persistent. Now again, if you see here, it has moved up after the results, and if you see here, it is trading above the 20 EMA and has reached that 88,800 plus levels. uh, Again, the RSI is slightly overbought. The volumes are decent now, but not too high. And now let's see the option chain data. Now here, if you see the option chain data, on the call side, the maximum OI is at 9,000, and then at 8,800. While on the put side, the maximum OI is at 8,000 and 8,500. So again here, and there is hardly any uh, put writing after 8,500. That means people are not that confident, and so they are keeping a margin of safety here. So I think the stock is likely to correct from here to levels, because there is a lot of call writing here. Very strong call writing is there at these levels, and there is a lot of call writing. Even there is more call writing in the money than which is there in put writing. So I think it has run up too much. So depending on the action of these calls which are written, we will be able to see what happens from here. Uh, in terms of PCR, in terms of stocks, always higher calls are written or in terms of puts, because this is what is hedging, is what people do. So there may be a lot of hedging positions also out here, because the stock has run up too much. So people must be hedging their positions also. So I have finished. Now we'll take questions.